Hello traders and friends. I haven't done a video for a couple weeks. I stay in the chat room most of the time these days, but at any rate, I'll try to do a quick rundown. And today we have two important things hitting the market. We're going to have home builder data and we're going to have energy. So both the financials and energy, which are two major driving factors for the markets, are going to be hitting the markets on data today. And we already had API numbers for energy come out 4:30 last night, and we had almost four times the build on inventories. So that could put a damper on the energy sector going into today's crude inventories. So at 10 o'clock we have new home sales, okay, and then 10:30 we have our energy inventories coming out. They're going to be critical for today's data. And I do think the markets really need a break here, and I'll give you some reasons why as I go along here. I'll start with this list, which I developed from stockcharts.com, and I went through all the Dow Jones sectors and made a list of all the stocks that were above their Bollinger Bands or above 70 on our RSI, or even showing some negative divergences. And I made a nice little spreadsheet showing this data. And I want you guys to see all these sectors on the Dow Jones. They're above 70 on, you know, all these different sectors here are above 70 on the RSI, suggesting overbought territory. So, and then there was a whole like 15, 20 more of them that were just barely or below 70, which I didn't make that missed the cutoff. So, and then we have a bunch of sectors that are even above their daily Bollinger Bands. So be aware that this market is getting extremely lofty. I'm going to quickly run through these charts, okay? Aerospace and defense above the Bollinger Band on the daily, suggesting that we might get a little bit of reprieve here for a little bit. Delivery services, like your FedExes and stuff, and your transports might be getting toppy here. We might have a reversal pattern going on here in your transports. Electronic equipment possibly getting overbought. Double top looks like setting up here. Another double top type of situation going on here. Industrial goods and services. Okay, and we have more durable goods orders and numbers coming out tomorrow. So industrial we could get additional weakness tomorrow, and tomorrow is the end of the week because Friday is a holiday. We're getting some double top right here on the another industrial index. Your property and casualty insurance, which is also related to your financials, it's also getting potential reversing, topping reversing pattern right here. So keep that one on your radar. Another topping reversing pattern potential on your transportation index. This one here is breaking out of the Bollinger Band and coming into the 200-day SMA, and that's your publishing index. Industrial supplier, another industrials. Keeps this in mind. We're pushing the upper Bollinger Band, and we have industrial data tomorrow. Okay. Got a double top right here. Construction and materials. This one here is going to be related to the home builders, which is coming out again today. And I want to point out also yesterday we had existing, or the day before we had existing home sales, and that number missed. Okay. And tomorrow we're going into new home sales. So keep that in mind. We might have pressure on the your home builder sectors. Then I also wanted to mention, while I was thinking about it, we're also moving into the blackout area for earnings season for corporate share buybacks. And April this decline in April is largely due because a lot of the companies are not going to be allowed to buy their own shares back during the blackout period. And we're going into quarter end, and we're going into tax season, and plus a blackout period. So there's a lot of negative driving forces that are going to cap the markets here, in my opinion. Now, I also want to mention here this gap we got right here that happened on. We had the roll last week on the crude futures contracts. Well, it created a gap on the roll, and these gaps typically always get filled. Okay, and we have a negative divergence on the 1 hour chart already developing here, which it may or may have not already reset. But like I said, the API was already a 4-time build last night, and we had this gap right below us here on the crude. And I personally believe we're going to come down and at the very least fill the gap on this crude, putting additional pressure on the markets today. It's important to realize where your home builders are right here on the grand scheme of things. And on your weekly chart, you see we have some reference uh, swing highs at this area on your home builders. So this is going to be really important data coming out today. So keep this on your radar that this big run up in the markets might be losing some steam here. And remember, we got durable goods orders out tomorrow on your industrials. And look where we're at right here. We've looked above the resistance, and we've come back down into retesting this line. So if we start selling off tomorrow, the industrials could see a substantial pullback at these levels. So keep that in mind, and the industrials are extremely overbought here. I do want to point that out. It can go much higher. I just want you guys to be aware of that situation. A few trades that I do have running right now. I do have a next week expiration put spread on Amazon. I put it on right around the 200 day yesterday, so I'm slightly underwater on this trade. But I see some more downside on Amazon here. Okay. Citing the overbought situation in the aerospace industry, I did initiate a put spread in Boeing yesterday, thinking we were going to get a pullback, probably about a $5 pullback here, relatively short order. This is another one of my favorite short ideas. I also have a put spread on Caterpillar I initiated yesterday. And sometimes I like using these fib circles as a kind of a indicator that there might be to validate my short bias. But I'm thinking Caterpillar is going to come back down and retest the 200-day SMA on any type of sustained market weakness. So we're probably looking at about a potential $4 or $5 pullback on Caterpillar, especially at the industrials finally take a little break on the massive run-up that they've had. Now, Whirlpool's been on an amazing uptrend here, and we are testing the accelerated uptrend line as of yesterday. And like I said, we have more housing data coming out today, which will potentially break that trend line, and we could get a pullback to at least this trend support, the 172 area. So we're looking probably at $5 pullback at the very least on Whirlpool. And also, Whirlpool is the largest holding on the XHB index, and that's the Home Builders Index. A lot of people don't realize that, and that's why it's so important to the Home Builders Index. So this one here, I do have put spreads on this one too. This is another one, Disney, which is another one which I really love using these fib circles for a prediction. We're actually entering a down cycle based on this indicator, suggesting some downward bias developing for Disney. And if it can break this inner circle here, Disney could be coming down for a pretty decent sized correction here. So I do have some put spreads on that going out a couple weeks. Now Tesla has been on fire here lately, but it's coming off a reference topping area. This is a resistance zone, so I did enter some put spreads yesterday, and especially once we closed below the prior day's low. Okay, and that's why I initiated some put spreads on that. And let me show you one other chart. Now using my market webs indicator, we've got prior point of controls right here at the 228 area, and we are hitting some major overhead resistance, especially with the value area, monthly value area high right here at this zone 2. So I'm thinking Tesla's going to be coming back down to the 228 area fairly easily. So that's an easy $5 move just to come back into value if the markets do show any type of relative weakness. And that's one of the reasons I took that. And I do have X on too. Now this is one trade on US Steel, which we had some downgrades in the steel sector, and I thought we were actually going to get a decent size pullback all the way down to the 13 area, but we just got it all back yesterday. So I might have to close this one out to later today and just call it a wash on that trade. But yeah, but I was really looking for the 13 area on US Steel after the recent downgrades. So keep that one in mind. I do think US Steel has gotten overbought. It's just it might take earnings to flush out the longs on that one. Okay, that's all I got to say. Be safe trading. If you haven't noticed, I do have a bearish bias, even though the uptrend keeps pushing higher here. So I just want, personally, at these high lofty valuations on the indicators, on the daily indicators, I won't initiate any new swing long positions here. Good luck all, and safe trading.